following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain. Headline from the Wall Street Journal, states eye inactive broker accounts. Fascinating story that we'll get to, among other things. We'll be talking about some long-term care insurance today, as well as, if we have time, we'll get to some myths about your credit reports. But first, let's talk about this article that came out in the Wall Street Journal. It says, state governments eye inactive broker accounts. And there's something called escheatment, which is the age-old right of the government to claim abandoned or unclaimed property. And this has come to light recently in regards to brokerage accounts, that typically states have a rule about dormant investment accounts or checking accounts or things like that, that after 5 years or something, the property reverts to the state. Well, a lot of states recently have changed those rules to be 3 years, and typically an account was determined abandoned when mail sent to the owner at the last known address was returned. However, some have been moving towards an inactivity standard, and this is very troubling to me in some expenses. So it says more than 1/3 of all states, including Illinois, New York, Pennsylvania, Minnesota, Colorado, California, now use inactivity as the trigger for escheatment. And so I guess the scenario would be that if you had an account that was on automatic dividend reinvesting or something like that, although you and I would probably consider that account active, according to these rules, that is an inactive account, that an active account requires the owner to take some sort of prospective action on the account, that doesn't include just automatically reinvesting in dividends and things like that. So most fund companies and brokers and people would say that that's active. So anyway, it's creating a little bit of a dust up over the definition of active versus inactive accounts and whether states have a right to seize the property of these accounts. Anyway, it just goes to show if you're a buy and hold investor, you have accounts out there you haven't touched in a while, it may be worth your while to go in or pick up the phone and call and make sure there's an account activity. I know that I had some bank accounts that were for private investments that we put money in, and then we made the investment in these businesses, and they didn't regularly generate income. They're long-term type investments. So we had these checking accounts. And so I'd have to go in every year, and one year I'd deposit $1, and the next year I would go in and withdraw $1. Otherwise, the bank would determine that they were inactive policies and that they could close the account. So anyway, interesting reading. Just make sure you understand the rules about that, and maybe worth your while just to make an inquiry to your account, either online or through the phone or in person at least once a year, to keep states from confiscating your account. I wanted to talk a little bit about some credit report information. I know a lot of people focus on the credit report, people trying to buy a house or a car or things like that. I would like to see people pay cash for a lot of those type things, but I know that people still need to use credit. It's very important. And there are a lot of misconceptions out there about credit, and I thought I would talk about a few of them. First of all, a lot of people, we had a client the other day talking about they wanted to get a copy of their credit report, and so you can go to annualcreditreport.com and get a free copy of your credit report from each of the 3 major credit reporting agencies for free. Well, a big misconception is that when you get your credit report, it's going to give you your credit score. It's not. Your credit report is just a listing of all the things in your file, who you owe money to, accounts that you have open, balances that you owe, your payment history, things like that. But it does not include your actual credit score. Your credit score is determined by a credit bureau, such as Equifax or something like that, and they use slightly different scales and systems to grade you as your financial creditworthiness. You can go to get your FICO score at myfico.com for $20. You can get your credit score. The exception, of course, if you're denied a loan or given higher rates, then the lender is required to give you a free copy of your credit report. Interestingly, a lot of people complain about this. If you're in business and you extend credit to customers, there's usually a fee for you to pull someone's credit. Sometimes businesses pass it along. I know some rental agencies, if you're going to rent property and they have to pull your credit, they may charge you $20 or $25, but that's pretty typical. So don't feel like it's a ripoff, $20 to get your credit score. A lot of commercial businesses that loan money have to pay that as well. There is a website called creditkarma.com where you can get a free credit score, but they're not always the score that the credit bureaus use. So kind of use that site with caution. That it may or may not be reflective of what credit decisions are being made. Another big myth is that your credit score or your credit report has things like your race or income or medical history or things like that. And it doesn't. It's only debt related. There's no way that from a credit report anyone pulling your credit can figure out your income. If you had anything about your investment accounts, it doesn't say if you have an IRA or anything like that. It's not your criminal record report either. It's just simply your credit, a listing of credit cards and loans that you've taken out and your payment history and things like that. Of course, it has your name, address, social security number, birth date, and a lot of them also have your place of employment, but it doesn't have the details. Another common misconception is if you have overdue medical bills and say a hospital reports you to the credit bureau saying you're delinquent on that, it's not going to have on there what it was for. Like if you had the type of treatment and if you went in the hospital and you say you were in the psychiatric ward or something, it's not going to have that on there. It's not your health information. It just simply states that you owe this much money to this facility. Now, if you went to a plastic surgeon or something and didn't pay the bill, and you could probably figure out if the name of the doctor was there, but it doesn't have your personal information in it. Well, we're coming up on our first break. When we come back, we'll continue talking about some of the myths surrounding credit reports, as well as some things that you ought to know. So I'm your host, David Blain.